Okay, everybody, we're here with Jeff Schneller of Corby Mortgage, my preferred lender. And Jeff, can you tell us a little bit about how COVID has impacted mortgages? And then we'll talk about how people can do their best due diligence to get ready to apply for a mortgage.
Sure. So the banks have all had some reviewed all the different aspects of the different types of loans, and Freddie Mac and Fannie Mae, which is considered a conventional loan, probably has had about the least amount of changes. And I would say for the average borrower, it is business as usual. You can still get the first-time homebuyer programs with 3% down. You can still put 5% down. There really hasn't been a lot of changes. With self-employed borrowers, they have some slight restrictions, and in some situations they'll need a little bit more reserves than previous. But again, conventional loans, we're still lending with very little restriction. I think in the government loans is where you've seen probably the most change, and especially with FHA. And FHA, a lot of banks have really been restrictive on those programs. They're requiring a higher credit score, and also having some major price adjustments, where traditionally the FHA loan was priced a little bit lower than the conventional, and nowadays you see a lot of investors having those increased just because they're considered a higher risk at this time. So if you've got an FHA borrower, it doesn't mean that they're not going to get approved. And there's a lot of investors, and I'm one of them, that still will underwrite down with a low 600 credit score. But you do have to qualify those loans a little differently. And so it's very good if you've got an older pre-approval for an FHA loan that you're working with your lender and you're in constant communication with them and making sure that your information is up to date and you still qualify for everything with that. The same with the FHA market. The jumbo market has also been impacted greatly as well. There's a lot of banks that are just simply not lending in the jumbo market, or perhaps they're lending only to clients that have depository accounts with them. We're still lending in the jumbo market with 10% down, but I'll be honest, it's a rarity that people are lending in that market with low money down, or if lending at all. So I think those really are the big changes. But I do think it's important to note that for the great majority of people that are employed and that have not temporarily lost their jobs or ever had their income affected by COVID, that banks are still lending money. And I think that's an important message for today.
Great. And as far as people who are thinking about buying in the near future, what are a couple tips that you would have to make sure that their things are in order and put them in the best position for applying for a mortgage?
Yeah. I think now more than ever, credit score is everything. So with conventional loans, every 20 points in credit score is going to provide you with a little bit different interest rate. And I think it's very important that borrowers focus more on that. Credit is not good, bad, or really good. It's a number, and I think it's important to know what that number is, and then also talk to someone that can give you some tips on adjusting the number and making small tweaks before you purchase. And it's not time to do it when you're under contract and ready to close in 35 days, but it's important to do it when you're 60, 90 days out, when you're in that pre-approval stage. Really go through and I often will say, well, here's a couple of recommendations that could possibly get you a higher rate or a better rate. And in this market, there's just a very wide degree. If you're over 740, 760, you're getting really, really low rates. And even at the 680 and 701 credit scores are getting much worse rates than everybody else. It's becoming a really big impact these days. And especially also again with FHA and in the jumbo markets, the higher credit scores are getting much better rates. And I think it's very important to pay attention to that. I also think that reserves, and when I talk about reserves, it's how much money do you have left after you make a purchase is really important. A lot of the banks, they want to see that you're stable and not just have enough money to get into the house, but they want to see that you have enough money to be able to afford that house if, God forbid, something were to happen with your employment or your income, or who knows, your transmission goes out, whatever the situation is. They want to make sure that you're stable. And I am seeing a lot of banks that are having increased reserve requirements. I think anybody that's living through these times, just outside of banking, is kind of understanding the importance of having some money put away. So I would much rather see people apply for either an FHA loan with 3.5% down, a first-time homebuyer program with 3% down, or perhaps put 10% down and leave themselves with a nest egg, versus putting every last dollar they have into the house. If you've got strong credit, PMI is very inexpensive. It's a competitive market. PMI is not just one factor in the conventional. There's actually 7 or 8 companies that offer PMI insurance, and it's something that can be shopped, and it is something that is very competitive and very inexpensive for high credit score borrowers. So, talk to your lender, if it's not me, about some of those different options and the cost of PMI, perhaps with 5%, 10%, or even 15% down versus spending every last dollar.
Okay. How long are things taking to close from contract? Are you seeing a delay in processing time?
So, yes, for refinances. Refinance transactions are taking a longer period of time, but most investors and most banks have a different underwriting times for the purchase market. So I still think, maybe the 3-week closing that we were slamming through in December, that's probably not going to happen, but 30 to 45 days is still within reason on a regular purchase. The more complex the file happens to be, you might experience a little delay. If you're self-employed and you've got tax returns and you just don't have all your documentation up front. But again, it's proper planning during the pre-approval stage that will help buyers guide through the process. Getting those tax returns and knowing exactly what you need up front is very important.
Okay. And finally, are you seeing appraisals being affected by COVID, either by getting them done or by value?
I have not seen any appraisals affected by value. As of yet, I still believe that home values are maintaining, and there is no restriction on that. I have seen an increase in property inspection waivers, where an appraisal may not be required on the property. So that's something that's been increasing over the years, and I have seen a lot more of that. But no, I really have not seen major issues with delays in appraisal. And again, it does come back to timing. If you've got a 30-day closing and you wait 2 or 3 weeks before you order the appraisal, well, you're gonna have a problem. But if you order the appraisal after the home inspection's been completed and you understand that you want to move forward and you give yourself plenty of time, that will give the appraiser plenty of time to make contact with the homeowner. And if they've got to wait an extra day or two to maybe get out of the home and make sure that it's clean. But I have not experienced any closing delays due to appraisal, to answer your question.
Okay, great. Anything else you want to share with people?
Yeah, overall, people are still buying and people are still selling. There's a market for everybody, and some people are speculating, do I wait? Do I not wait? I think, the time and the decision to buy a home really is one when you're ready as a homeowner. And if you have a job that would be considered unstable at this point, well then, I think it's time for some of those people to actually consider maybe holding off a little bit. But there's so many people that are in professions that are not going to be affected by COVID, and that have they're financially, they've got the reserves and they're ready to go. This is a great time to buy with his rates as low as they are. So, and it's evident that, I'm getting 5-6 purchases a week right now. It is very busy out there. And there's also some great programs to take advantage of. And I'm going to just mention one, and it's called the COVID-19 Community Heroes Program. and we do offer it. And it's a great program for not just only police and fire and nurses, but a lot of other people that are considered on the front line, often ignored. And that would be like your state and local government employees, your mail carriers. They've got truck drivers are included, restaurant owners. So it's a really neat program. And it's one way one of my investors is giving back to the community, and they're waiving their lender fee. And it's not just one of those things where it's built in, you get a higher interest rate. It just truly is just waiving their lender fee, which is a value almost $1,000. So besides that, I guess the other thing is if you have an online pre-approval and it's a month, 2 months, or 3 months old, please make sure to communicate with your lender and ask about changes to guidelines, and just double check and make sure that your pre-approval hasn't changed with some of the changing guidelines. And I always stress, having a face of somebody and not just an online pre-approval, especially in this market, because things are changing.
Great. Thanks so much, Jeff. We'll check in with you down the road.
All right. Thanks, Vicki.
All right. Bye.
Take care, all.